All right, those are our top stories. Let's get started with answering all your stock queries. Mayuresh Joshi and Rajat Bose are our two experts this afternoon. Gentlemen, good afternoon to both of you. Our first query comes in from Monarch Shah, who's on the line with us from Pune. Hi, Monarch. How can we help you?
Yeah, I'm holding. Hi, good afternoon to everyone.
Good afternoon.
I'm holding an ICICI Prudential Life Insurance stock since IPO. At the rate of 334. So, wanted to know the long-term perspective. As like yesterday's announcement regarding the results of the company.
Right.
It was not as good as
Yeah, it was a tad on the weaker side actually, so I can understand that as an investor you might be worried as to whether or not you should remain invested. Mayuresh, your thoughts, for somebody who's bought in at the IPO, is there reason to remain invested at least for a few years?
Afternoon, Sumera. Oh, I think that is and that should be the case. Again, on the numbers front, a tad bit disappointing, but one should realize and understand that the base that you're probably working on a YOY comparison had the demonetization effect and the GST effect. So I think a large element in terms of 4 to 6 quarters prior to this number, I think a lot of inflows probably came in to the insurance sector as well. But I think the general numbers itself, the protection business has grown to 8%. What you're also talking in terms of the expected persistency ratios and the persistency curve across time horizons, I think that is showing improvement. The solvency ratios are very, very solid for the company. The value of new business margins have probably expanded to 17.5%. On the premise of the protection business actually moving higher. And the ULIPs and the contribution in terms of the retail annualized premium equivalents is still higher, and ULIPs still account for 80-odd%. I think the increasing product mix and the tilt towards high margin businesses supports the VNB margins actually expanding further. So again, the base case here is that the annualized premium equivalent earnings growth related story still continues. The APEs should grow at a very decent clip going forward as well. And from a valuation perspective also, it trades around 2.5 times on an embedded value basis. So I think the growth prospects probably there for the company over the medium to long term. So the suggestion to the investor is to clearly hold on to this stock.
All right, you can. Yeah.
All right, Sneha Sinha has written to us. She writes to us from Punjab. She holds 173 shares in Asian Paints, which she bought at about 510 rupees. She bought it, I think, 2.5 years ago. She's a long-term investor and wants to know what she should do. Mayuresh, your take on Asian Paints. Numbers look good this time around for somebody who's been a long-term investor already and wants to remain invested. Is that the way to go?
Well, it should be, and I think the power of compounding is obviously working for the investor. And I was hearing Mangalam out yesterday post the numbers on your channel itself, and the phenomenal growth that Asian Paints is reflected in volume terms, which has again got reflected in terms of the leverage that they have taken because of the price hikes onto the EBITDA margins at 19.9%. I think that probably stood out for the quarter. The management has reiterated that input cost inflation might take a hit in terms of EBITDA margins, but the ability to pass this on in terms of discretionary demand expected to come back very, very strongly in the second half, and being a market leader again within the paint industry and the decorative space itself, I think that should hold up the earnings for the company. The cut in GST rates from 28 to 18%, I think the unorganized sector, which is almost 25-30% of the industry as a whole, I think a part of the business should gradually start shifting towards larger organized players like Asian Paints, and the expansion again into tier 2, tier 3 cities and the repainting demand expected to come back very, very strongly because of MSP hikes and the discretionary demand patterns remaining strong, should augur well for a 10-12% top line growth or 14-15% earnings growth. So clearly hold on to this.
All right, hold on to Asian Paints, the long-term wealth compounder as Mayuresh calls it.
As well as Hexaware, which has actually been hurting through the morning and continues to actually see some more pressure. Up next, our query comes in from Mr. Deven Shah, who's now on the line with us from Ahmedabad. Hi, Mr. Shah. How can we help you?
Good afternoon. Good afternoon. Yeah.
Tell us.
My query is regarding Delta Corp. I bought it about 170. So what are the prospects of Delta Corp? Because it has corrected substantially.
Okay, so you want to know whether you should remain invested, or are you looking to actually add on over here?
No, whether remain invested and also add on, both.
Okay. Mayuresh, your thoughts?
So, Sumera, I think the numbers had been pretty reasonable for Delta Corp. And going ahead, I think the new gaming policy is something that will define the trend. Now, going with the earlier norms that had come through, you probably expected to see a bit of a dichotomy, I think, the offshore and on-site casinos that you're probably talking about. And even if one assumes with the increase in the license fees, a lot of the other operators who are operating probably onshore are going to feel the brunt. Again, Delta will feel the brunt for its onshore operations as well. But I think the footfalls for its biggest operating unit, that is Delta Royale, should probably continue, and that itself will lead to strong earnings growth and visibility. The second element in terms of the results profile itself, both the casino gaming business and the online gaming business have actually done well. And even if you assume EBITDA margins to contract a tad bit, 36, 37 odd %, EPS probably to get reported around 9 odd rupees, there is still reasonable scope in my opinion even from the current levels. So I think the investor can clearly hold on to the stock as well.
All right, let's take a quick break.
While Gunjan Jain writes to us from Amravati, holds 153 shares of Hexaware at 230 rupees for the last 1 year and 5 months. A long-term investor wants to know whether to hold or sell. Making a bit of money today is the only perhaps one of the down days after a good set of numbers. Mayuresh, should she ignore today's down move and continue to hold on? She's been making money for the last 1 year, or she should perhaps sell in today's down day as well?
No, so I think it really depends on the viewpoint that the investor holds, Mangalam. So I think if it's a longish view, I think she can hold on. I think the kind of commentary that the management probably gave out, both in terms of the dollar guidance at 12 to 13%, and few of their business verticals, which includes manufacturing, consumption, insurance, accounting for 46%, holding out quite well. The only sore point probably was the flattish EBITDA margins that the company reported, and particular, I think, key client-specific issues. So I think that is what the street is probably a little bit plagued about, because the valuations of Hexaware, even at the current juncture, are no way cheap compared to a lot of its peers. So again, I think a large element of the viewpoint probably remains, but an alternate stock that I can also suggest to the investor is KEI Industries. Very strong order book at 2,570 crores. EPC stands at 1470 odd crores. What you've probably seen in terms of the EPC execution happening at a fast clip, the extra high voltage segment also contributing significantly better, would lead to EBITDA margin expansions of 10.5, 11 odd %. You're probably talking about a 16-17% top line growth, a 19-20% bottom line growth, and again I think the ROEs and earnings per share probably expanding in double digits over the next 2 years. So I think an alternate choice for the investor is KEI Industries on declines in a staggered way.
All right, gentlemen, thanks very much for joining in and for advising our viewers.